Good. We want something. I was going for less. That's good. That's good to hear. Okay. So, all right. So I'm using a headset today, and good. Hopefully, it's a little more clear. I'm having a little trouble projecting my voice. I don't know if you can tell. So, hopefully this gives it a little bit of boost. Okay, so welcome back, everybody. Good to be back. All right, I had a great session with you all the first time around. Lots of good questions, some new people in the room asking questions. I like that. And so keep it up. We had some good questions about things that were going on today with Mr. Trump, and I wanted to address that because it really opens the door to some interesting questions. Some folks were making references to things Trump might do today that might weaken the dollar. Now, I actually have Mr. Trump's schedule in front of me. And the only thing I can really see here, he's not going to make any public speeches, but he is going to lead a meeting of the National Economic Council at 4 p.m. And that's the only thing I can see on here that might lead to a strengthening or weakening of the dollar, et cetera. But also, Mr. Navarro gave a speech about trade, and he's a representative of Mr. Trump, and he's was speaking about trade, and he's going to be renegotiating trade deals, and some of what he said could potentially weaken the dollar. But I want to present to you a different way of looking at this, because in my opinion, Trump could actually strengthen the dollar. And this is something that most people aren't looking at. And this wouldn't happen today, but this would happen over time, and it could be dramatic. I'm going to show you the dollar index. This is the US dollar index. And of course, that's the US dollar against a group, against a basket of currencies. And that basket includes the euro, the yen, the pound. And I'm going to take you back to a stretch where the dollar was getting weaker and weaker and weaker. And that stretch goes from 2002 to 2008. And in 2008, the dollar got stronger, and that was really because of the financial crisis. People were panicking, and they were buying dollars because they were scared, and they were buying U.S. treasuries. You know, when people are scared, they'll buy U.S. treasuries over anything. And you need dollars to buy treasuries. So, but before everybody went into panic mode, the dollar was falling every year on this chart except one. There's 1 year on this chart where the dollar rose. That year was 2005. And the dollar rose that year for a very specific reason. So 2002 to 2003, dollar fell. 2003 to 2004, dollar fell. 2004 to 2005, dollar fell. 2006 to 2007 and 2007 to 2008, dollar fell. But the only year in there that the dollar rose was 2005 to 2006. What happened? Repatriation. The tax rate for companies, U.S. companies, to bring their dollars home is 35%. That's the U.S. tax rate right now. And so a U.S. company today and back then, if McDonald's earns $1 in Europe, well, they earn euros, right? But if they bring those euros home and turn those euros into U.S. dollars, they must pay a 35% tax. That's true today, and it's true all of these years except for 2005. In 2005, that rate was cut from 35% to 5%. Technically 5.25%. And it started on January 1st and it ended at the end of December. And you can look at the chart and you can see that right at the very beginning of January, the dollar turned. The dollar is going down, 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 and suddenly it goes up. And it goes up for most of 2005, almost to the very end of 2005. Because companies knew that if they brought that money home in 2005, they would pay a lower tax rate. Now, in Forex, we have a saying, follow the money. Follow the money. Companies knew that bringing that money home in 2005 meant they would pay a lower tax rate. Money began to pour into the U.S. because companies knew they only had to pay a 5% tax rate in 2005. So companies began to pull all that money home, and the dollar rose from 82, really below 82, to above 92. And then when the year ended, the downtrend resumed. It's not a coincidence, okay? If you give a lower tax rate, the money comes home, and follow the money. If the money comes into the U.S., the dollar goes up. Guess what Mr. Trump wants to do? He wants to lower not just the corporate tax rate, right, which would attract money in, but he also wants to lower the repatriation rate. Now, all of the rates are open to debate at this point, but during the campaign, he threw numbers out there as low as 10% for a repatriation rate. Repatriation means bringing money home from overseas. Now, there's a lot more money overseas now than there was then for U.S. corporations. Apple alone has, well, it's estimated that Apple has, I believe, $300 billion overseas alone. Just Apple. Google has a tremendous amount. Amazon. You know, I would be willing to bet that between Google, Amazon, Apple, Microsoft, Cisco, Intel, you'd probably be able to pull $1 trillion into the U.S. This could cause the dollar to skyrocket, particularly. Now, the dollar might not shoot as dramatically as it did in 2005. Why? Because in 2005, when this repatriation law was passed, we knew that it was for a limited time. We knew that it was for 1 year. Whereas I think Trump is planning something longer term. But keep in mind, Trump will not be president forever. And after he leaves office, you may have another president who wants to have a higher tax rate. So companies will probably, if they're smart, they're probably going to want to take advantage of that low rate because they know it's not going to last forever, just like it didn't last forever in 2005. If they get the opportunity to bring that money home, they should take advantage of it because it's not going to last forever. Does that make sense? I hope so, right? That should make a lot of sense. They got to bring the money home, okay? They've got to bring the money home. So you can see the dramatic impact that bringing money home had in 2005. you look at that trend, right? And that is just a straight downtrend, but it just totally interrupts that trend right here. Throws a wrench into that trend and disrupts that trend. And this is the same thing that could happen in the very near future. So, yes, Trump has said that the dollar is strong and that the strong dollar is hurting the United States in terms of exports, and that's true. But at the same time, the policies of having lower taxes could make the dollar even stronger than it is. And, you know, that's not all bad. There are good effects of having a strong dollar. Just like there are negative effects of having a strong dollar, there are also positive effects. It makes your, as we said earlier, it makes your exports cheaper. It makes your exports more expensive to overseas, but it makes your imports cheaper. It makes everything you import cheaper. And who doesn't like inexpensive imports? I do. We all love to pay less for the things that we buy, right? And by the way, we all love to talk about helping the poor, right? Well, if you have a weak currency, that means the cost of buying things goes up. So if you have someone who makes, $20,000 a year and they're struggling to get by, well, the cost of buying clothes and food is going to go up because we import a lot of that stuff. You're going to make life harder on them. If you have a strong currency, the cost of food and the cost of clothing and the cost of imports goes down. You're making life easier on those folks. So really, having a strong currency, it's not that bad of a thing, right? It's not that bad of a thing. Okay. SWSW says Trump is about to announce a new travel ban. Yeah, I don't know if that's going to necessarily affect the currency directly, though, right? That might not necessarily impact the currency. Okay, but what I'm talking about is economics, right? And believe it or not, this is a type of thing because countries that have one of the things you notice, right? Countries that pursue a weak currency don't always have the best living standards. Like China pursues a weak currency relentlessly, right? They do not have a very good living standard. Their living standard, as they have gradually increased the strength of their currency since 2005, their living standard has improved. And their population is now beginning to buy their first cars, and they're beginning to eat meat for the first time, and they buy cars for the first time, and buy the first televisions, buy their first washing machines. Standard of living comes up, so, and why? Because I think it's tied to their currency beginning to get a little bit stronger. They were at 8.28 to the dollar fixed for decades until 2005. And the fact that they've allowed that to strengthen to between 6 and 7 to the dollar, I think it's no coincidence that coincides with an increase in the living standard. Pound needs push up. Well, I'll tell you what, their weaker currency in the UK, I'll tell you what I think Britain's going to do. And by the way, I'm answering SWSW, who's over on Q&A. I've got 2 windows open, chat and Q&A. So if you don't see it, I'm answering questions on both of them. So I know some of you only see one window. There's 2 windows there. So the pound got crushed by this Brexit issue, right? And I think what's going to happen here is Britain's going to do what the U.S. is exactly what the U.S. is going to do. Britain's going to cut taxes dramatically, right? And they're going to attract businesses in from the European Union. So the European Union is trying to get billions of dollars out of Apple, for example, right? And Apple's based in Ireland, and they pay almost no taxes to Ireland. Ireland has a real sweetheart deal with Apple, right? And Apple pays almost zero to Ireland. And the European Union comes in and says, Ireland, you can't do that. Apple, you owe us X billion dollars. Well, if Great Britain breaks away from the European Union, Apple can always, Britain could always say, hey, Apple, come on, move a little bit south, set up shop in London, we'll cut you a great deal. Move all your jobs here. Move all your business here. And Google, you could do the same. The next thing you know, Britain will be humming. I got a feeling that's what's going to happen. And then once that begins to happen, I think you're going to see the the pound is going to rally quite a bit. But it's going to take a few years to get all this going. And once that happens, then the European Union just falls apart. That's how I think it's going to happen. So the European Union knows this. They see it coming, and they cannot allow it to succeed. So the European Union is going to do everything they can to make Great Britain fail at this. They cannot allow Great Britain to succeed. So anybody out there listen to Pink Floyd? If you ever listen to Animals by Pink Floyd, right? Then you're probably familiar with the Battersea. Power station. Guess who just made it their London headquarters? Apple. Right? Coincidence? I think not. So if you've ever seen the Pink Floyd Animals album cover, it used to be a power plant called Battersea. Now it's Apple's London headquarters. It's huge. It's 500,000 square feet. Right? I'll show you. Does that look familiar? You Pink Floyd fans? How about this one? All right. So this is Apple's new London headquarters. To me, that looks pretty big. I got a feeling Apple is eventually going to move their entire European headquarters there. Right? There you go. There's the Pink Floyd reference. Right? Fantastic. So London is going to steal all these businesses from the UK. And that's what's going to eventually cause the pound to rally. But that's longer term. In the short term, they've got to work this thing out. They've got to work out a deal with the EU. It's like a divorce, right? They've got to negotiate with lawyers and politicians, and it's going to be ugly. All right, listen, tonight, Australia, right? Pretty sure. Is it tonight? Yeah. Interest rate decision out of Australia, expecting to stay at 1.5%, and you've got a statement. out of Australia. Reserve Bank of Australia statement. Okay. Now, Aussie got crushed the other day. 77 is just bad luck for Aussie. If you look back, I guess we can extend this because this is just a rough area. You see how Aussie between 77 and 78 is just bad news for Aussie? And this has been the case for a year, right? Just boom, every single time. It just gets whacked. But now it's pulled back to a point, and look at the hammer here. You see that hammer? It's not really a hammer. It's got the head's too big. The head should be smaller. But that's kind of a positive rebound, right? And I think once you exceed the high of this candle, I think you're good to go. As far as like if you got stopped out on Aussie, I think it's okay to take another shot at it here. Your stop would be under this low. But I would be looking to get out once you get back into this. This is the danger zone. So like for you fans of Top Gun, right? This is the danger zone, right? This is every time this is like the Bermuda Triangle up here. 77 is like the Bermuda Triangle. Every time you fly into it, you disappear, right? So I'd say you have smooth sailing until you get up into this area, and then get ready to hit the eject button up here. Now, this is interesting. I called this a hammer because I was looking at New Zealand. Yeah, TP1, the danger zone up here, right? You just got to be ready to hit the eject button. I'm punching out, Goose, right? So, okay, Maverick. Now, the reason why I called that a hammer, that's not really a hammer because there was a good hammer on New Zealand. But then I was very disappointed by the candle that followed it. This is actually a pretty decent hammer here. I like to see a longer wick, but everything's defined by what precedes it. So you're coming down, 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 and then a hammer. It's usually pretty good. Pretty good sell-off. All right? But you got to exceed the high of the hammer to get the signal to buy. And that has not happened yet. Normally what I would do is say, all right, we've had a strong sell-off, big red candle. And then first of all, I would like to see a longer wick because a longer wick means that the reversal was even more sudden and more painful and more dramatic, right? You really do want a dramatic reversal. You really do want them to feel it, man. You want them to feel that reversal, okay? You want them to feel it, okay? And then when you exceed the high here, then you can then maybe it's okay to go and to go long. But and then if it exceeds the low, then you just dump the whole thing and you say that hammer's no good, right? In other words, you see this candle today. If that candle exceeds the low, you would just say dump the whole trade. Before you even enter it, you would say this whole thing is invalid because we've gone beneath the low. Because that's where you would place the stop if you ever went long. You would not go long unless you exceeded the high, right? And if you exceeded the high, you would get the stop under the low, right? And but if it takes out where your stop would have gone before you even get in, at that point you just say, no good, next trade, move on, right? By the way, tomorrow for you New Zealand dollar fans, and by the way, this is a 7-month low yesterday, so if you're a fan of this currency, you're not loving life right now. But tomorrow is the a big day for New Zealand because the GDT price index. But that should be bright red, man. GDT price index to me is every other Tuesday. They actually have a milk auction, and I've seen it create intraday gaps on New Zealand dollar, so it can be a market mover. GDT price index. That comes up tomorrow. Tomorrow morning. We'll actually be here tomorrow. Maybe we get a setup off of that. It did not create fireworks last week, admittedly, but sometimes it does. So we'll see. We'll see. By the way, later this week, non-farm payroll, a rare second Friday of the month for non-farm payroll. Usually it's the first Friday of the month. This month, it's going to be the second Friday of the month. Okay, and yeah, Dr. Copper got whacked. All the metals got pounded last week. I really had high hopes for that big triangle on Dr. Copper, but man, it just Copper needs a doctor after that pullback. Man, it just got beat up, and I was really kind of high hopes for this thing, you know? Ouch, that hurt. Wow. Sorry about that. All right. Okay, this thing was, fake false breakout, sharp pullback, and then boom, out of there. Yeah, big triangle, just big disappointment on copper, really. I had high hopes for this. And, you know, this was part of my whole China thesis, China's coming back thesis. And it's like, man, you know, just very disappointing. And I'll tell you what, too, I dumped my Caterpillar shares, too. I had some Caterpillar. And, man, I hate drama. I don't know if you saw what happened, but Caterpillar got investigated by the feds. You see that big red candle? You see this big red candle? Caterpillar, on Thursday, the feds show up at Caterpillar's headquarters in Peoria, Illinois, with search warrants. Well, I don't need that kind of drama in my investing account. I don't know about you, but I kicked it out. I still had a nice, I bought it like at around 82. And I said, you know what, if this thing breaks 92, it's like an air pocket. There's nothing here. It's just a big, it could go to 82. If it breaks 92, it could go to 82. You see what I see? If it breaks 92, there's nothing. It goes right to 82, and I'm back where I started. I'm like, forget that. Because I got it back around here. I got it somewhere in here. I forget why, but you know, even after that red candle, I said, well, I'm not going to have it go all the way back down to here. So disappointing, you know, but I hate that kind of drama, because my experience has been this. When you see that kind of drama start, it rarely ends quickly. And when you see somebody with IRS on the back of his jacket walking to serve papers at a company headquarters, that usually doesn't end well, or it doesn't end quickly. This could go dragging on for quite a while. I don't know exactly what's happening. And some people were trying to say, well, it's old news. That's all speculation. I don't know if it's old news, new news. I don't want to know. I'm still up 13%, and I'm thinking, I got 13%. I caught a dividend, and I'd rather be a spectator. I'd rather be a curious bystander than an interested party at this point. So I'm cashing out. I hate that kind of drama. No, thank you. Right. So anyway, yeah. So copper's disappointing. Caterpillar, forget about it. And anyway, that's about it. So and Aussie got rocked too, man. Aussie got rocked against the dollar anyway. Got rocked pretty good. All right, gang, that's going to about wrap it up. Two pretty good sessions today. And hey, come back tomorrow. We're going to have two pretty good sessions tomorrow too, I hear. So come on back tomorrow. I enjoyed it. I hope you enjoyed it too. Feeling more like my old self again. So, and I think, hopefully, thanks for sticking with me through a really kind of a tough time. So I appreciate it. All right, gang. I'll see y'all tomorrow. Everybody have a great day. Take care.